Good morning. I hope you guys are doing well, and welcome to today's edition of the London Session Open. Today is March 13, 2020, and it's 9:49 a.m. in London when we're doing this market update. I changed the timing here. I don't want to disappoint people too much. Usually it's just to say we start at 9:30, but let's just put it at 9:45, which is when we usually start. So good. I hope you guys are doing well. I know it's a brutal day on the markets yesterday, and you had to be really, there's a bit of luck as well involved, and definitely a huge amount of skills, but definitely luck. Yesterday you had crude coming down, you got EURUSD coming down, you had dollar Swissy going up, and then you got stock markets coming down. So, and Bitcoin, we need to find a new name for that one. I invented one name already. I shared that with my mate of mine. I'm not going to tell you here because it's a funny name, but a bit rude name. I'm sure you can come up with your own names for Bitcoin. It declined with 35% yesterday. So there's really no safe havens right now in the market here for the way it's looking. But it doesn't mean that you can't trade and make and obviously lose money. I was a bit lucky yesterday with the Dow on that initial push, so I walked away a happy man. We can talk a bit more about that in a few minutes, but let's begin then with the market then. So what happened with gold then? Probably liquidation margin calls. That's what people are saying. What does that even mean? Well, if you have people that are long stocks, and then they're also probably long gold, so because they need to cover for the position in stock markets, maybe they have a hedge in gold, they need to close their gold positions to hedge that in those equity positions. That's one explanation. No one really knows, because no one really knows exactly why everybody pressed on the sell signal yesterday. About the dollar's having a bit of a comeback, which makes perfect sense, and that is obviously putting things under bear pressure. The euro just by itself was a little bit overbought, and I think we're having a bit of a corrective move now. And then you have other things as well. There are some stuff happening in the UK. The government said if you are sick, then or have mild symptoms, just stay home. France as well, they put out a message that they're ready to close the borders in coordination with the EU. So things are going in the right direction. And more importantly, you have that pandemic signal from the World Health Organization. It's a bit like, so it's just, it puts you on red alert. And that means when there's some governments and they have rules, they're like, oh, this governmental body or like the Health World Organization, that big group are telling us we should get ready, we should prepare. So then people will act on that, and many times they won't act before that because they don't want to be caught out wrong. They don't want to be in a situation where you put on all these different measures and then they're like, yeah, but they said that it was no problems with it. For example, the French are saying they want to coordinate with the EU to closing their borders because they don't want to step on anyone's toes and stuff like that. And that is why that pandemic signal is actually good, because that could actually shift things, and people are already starting to make some good efforts. But we're not out of the woods yet. So I found this, which is very good. That's some interesting data, and it shows you the daily change, because it's all about the daily change when it comes down to the way the market's going to react. So let's see if I can load a different chart. And then let's see if I can just change this. So you can't put stock markets on top of this, but this is the Chinese data. So I started to cover this in January-ish, because I was actually in Hong Kong in the beginning of January, or by the end of January here, when things started to pick up. Anyway, you could see how the cases increased. And here on February 5th, this market, this is not a market, that's when you had the highest amount of people. You got 3,892 people. And by then, they already had things under lockdown for some time. And around that time, if you look at the Shanghai Stock Composite, the market bottomed out on the 4th. So on the 4th, the market bottomed out. I do know they did a lot of crazy amount of QE here, don't disagree, and push money into the markets, the Chinese. But here on the 5th, the number started to decline and then actually had lower and lower and lower growth. You still had several thousand people being affected. But when we hit that peak, that is when the markets bottomed out. And I did a special webinar on this, which is this one here, which is revisiting the SARS and coronavirus crisis, or the SARS crisis, and it was the same pattern. So that's what I'm looking for, and that could indicate a low in the market, that longer term low. It doesn't mean though we can't buy stocks in the short term. If you know what you're doing, then you can do that. But let's take a look then at the current data. So we have Italy. So Italy just imposed quite some strong measures. They did that on Monday. The number of cases are increasing, and this is not percentage change. This is number of people getting affected. Now, what's interesting here is that you still have high numbers, and the reason we have high numbers is because more people have it. So if you have 10,000 and you get a 10% increase, then you have a growth of 1,000 people, right? It's just the way it works. But we can still sort of use it a bit to judge what's happening. And you can see here that they still have that high growth. And it was just on Monday they imposed these new stricter rules, which means that only shops to buy food are allowed to be open, and as well pharmacies. But bars and other places have been closed. Let's do what we've done in the past. So we'll take a look at some live cameras in Italy, see if they have learned. Well, there's definitely far less people, and all of these, that's police cars the way it looks like. Maybe that's police as well. There's definitely some people doing their things, but there are not as many people as usually. Let's see what's happening in Rome. Okay, they're doing this a bit differently. I don't know this sector. Okay, so this is in Rome. This is an advert actually. There we go. Yeah, so it's not a lot of activity here. You got the police officers that were there yesterday, so it's very, very quiet. So things are definitely progressing in the right direction. So what we want to do is you want to keep an eye on these numbers. Maybe in 2 weeks from now or so, we start to see a peak in that. Now we need to get rid of this though, because Italy is just one part of it. You have all the other countries. So you have Spain here leading, and then you have France, and then you have the United States also coming up. And the way this is looking now, there's not enough measurements done in Spain or France, in the US, in Germany, and not even the United Kingdom most likely. What will happen here most likely, if you look at the total numbers, US just has 1,700, France has, they all have about 3,000. So what I think what needs to happen here, it needs to be a situation a bit like in Italy. You start to reach 10,000, that's when you start to get panic. What is quite interesting though is you have some governments like the UK government that is telling us there's already between 5,000 to 10,000 people that have it, and they still want to wait and see. Not really sure how that's going to do anyone any help. But yeah, so for now, from this perspective, we still are far ahead. And the US is, which is in the bottom here. Let's actually clean this up because I'm not sure you can see anything. Let's leave the US and UK. So you got US here picking up sharply, and this will continue to pick up because they have not been able to test. And again, we need to start to see that, but more importantly, people need to be far more aware what's happening. Let's see if we can get some live webcams in. Actually, there's no point doing a live webcam now in New York because it's really early still. But we can probably do that a bit later just to see how the activity is. So that's coronavirus update, and we'll probably continue to see pressure in the markets. Now, looking at the euro today, the market remains bearish below 114.10, and well, doesn't remain, did turn bearish, because before this, remember, I was looking at that, and then we took out that level, and now the market is more bearish. So if you look at it from a big picture perspective, it's understandable. The thing moved straight up, and then obviously you're going to have a bit of a tumble. So the market here has corrected 61.8%. And as well, don't remember, we talked about this as well. I said the Fed has already done all these cuts. Now it's time for the ECB. And the ECB did some stuff here. They pledged more money and TLTROs and all of this. And that is some sort of stimulus. And that's what happened. And that's why we had that slide. Looking at this today, we probably continue to trade sideways between the high at 14.98 and 107.81. Looking at it from a longer term perspective, I'd rather be long the dollar than being long the euro, because in the longer run, all these rate cuts in the US is just going to give the economy such a big push, and inflation is going to pick up faster, even though there's probably not going to be huge inflation because crude oil prices have declined the way they have. So I continue to be long-term dollar bull, and I think this will continue for longer, and I think eventually we'll go all the way down. Now though, looking at this again, trade more sideways, and I decided to be bearish below 114.10, and if we go up to 113.06, I think the market's going to turn bearish. We'll look this well at GBP USD, and I don't remember exactly what we did yesterday or said yesterday, but I do remember that I said we're trading sideways. You can be short and bullish, and you can also be short and bearish on the price of the downside. We took out that level and very, very quickly reached this first support level at 125.45. Looking at this today, you know, if we get rid of everything, you can clearly see how the market spent a lot of time here, and it can easily attack 128 on this whole area, but then we're probably going to go lower. And then we'll see what happens, because this is starting to look like a massive head and shoulders with a big head, left and a right shoulder. But let's see how things happen. You know, this whole thing with the coronavirus is definitely delaying negotiations. It's not helping during negotiations over Skype or stuff like that. Not that that's what they're doing, but, you know, it's not going to be as easy as before. And that's definitely delaying things, because by the end of this year, the UK is going to be out. So trading this, looking at this today, just give me 1 second. Sorry about that, I just had to sneeze. Looking at this today, this is still a downtrend. So the market is bearish below 128.66, and I think if we do swing up and we have 50% correction, then maybe from here people will be happy to turn bearish again and attack the lows. Here's your dollar yen. The dollar yen, you know, with stock markets going down, shouldn't the dollar yen go lower? It didn't. The dollar Susi as well went upwards. The dollar is doing quite good in the short term here. For us, there's not too much to do. We're looking still for that decline from a short-term technical perspective. I'll continue to be bearish below 106.75. Look at it from a big picture perspective. It all looks like a false move here, and we can potentially go upwards again. The U.S. government, the U.S. 10-year government bond yield declined massively, and has a high correlation with this market. So it declined further on the crude oil slide on Monday, but after that it recovered. So what can we do here? I'll just continue to be bearish. Okay, as for gold prices, so these are gold, this is gold. So the short-term levels we talked about did not held. There's nothing we can do about it. The idea was just to be bullish about these levels, so we'll risk a small amount. We don't want to buy here and keep it all the way down for the low. We want to give something back to the market. In fact, we have to give back something to the market. That's just the way it works. Now, if we look at this today, you know, after a good night's sleep, you can clearly still see that at least on the daily chart, we're still creating higher and higher lows, and we're just above support. So it's not the time to say, let's sell this now, because we are just above support. So what I'm going to do, I'm going to continue to be bullish, but I'm just bullish from this low level, which is 15.59, and I'll be bullish about 15.36, and from here, and then we can hopefully go upwards. Even without putting on any levels, you can see that the risk reward ratio of this should be quite good. So you're looking at possibly 2.88, almost 3 times risk reward ratio. If we do take out the low, we're probably going to trade lower, and then we'll go maybe to 1500 or something like that. and then we'll take it from there. Crude oil prices. So this is crude, and crude oil prices continue to be short-term bullish. We just need to look at it from a logical perspective. We're talking about crude oil. The market slid massively from its 2020 high. The market has declined with 57%. It's not going to give you another 57% decline. It might give you some bit more, but it's not going to decline massively. And you have this huge gap, and you're just above the 2016 low. So the question is, isn't things a bit priced in already? That's why, as you know, I've been bullish following the beginning of the week. I was not in a position to make money on this one. I bought here, and then I got out pretty much where I entered. So I didn't make any money on this one, but I remain bullish. For now, as long as you're above 25.93, I think the risk-reward ratio is for a move to the upside. And then, you know, when we come up to these levels, so if we just take fib from here to here, whoop, that's the wrong one. If we just take fib from here to here, you can see that you got yourself a 50% correction, maybe 40%, 61.8%, and you go up to $40 per buck, per barrel, and then from here you would have closed that gap, and then people probably sell again. That's what I think. All right, so this is the German DAX. So the German DAX, you know, aggressively bearish. If you're a long-term investor, long-term trader, this is not a bad idea to keep an eye on. Again, if you're looking at the cases in places like Germany, it's just going upwards. I think it's way too early to say that it's gonna. Actually, here, I'll take that back. So still, it's actually some limitations here in the German DAX, but it's unlikely, given what's going on in the other countries, that this is going to remain like this forever. And the reason for that is quite straightforward. They don't close the borders. Simple as that. I hope I'm wrong. Really hope. But it will catch up. Long-term perspective as well. I think, again, this makes perfect sense. You can have a little bit of a bounce at one point. I do think so. Now, looking at this in the short term, the market is short-term bearish. So this is your 1 hour chart. And this is the last trend finding level, which is 99.86. I took fib from the high to the low. We just reached that level here. And that is where I wanted to sell. Remember, that's what I want to sell. Remember what I said yesterday. We were trading here. I said, if it goes up, we can sell. But it didn't go up before it went down. Then you got the S&P 500. S&P 500 is bearish below 26.74. We just touched the sell zone this early morning. And that sell zone starts at this little spot here. So I'm just going to tell you a little bit of what I did yesterday. So yesterday, I'm looking at the market and I'm like, oh wow, this is declined strongly. I mean, it was the worst day in 1987. That was like, I'm not sure exactly how they calculated that. How can that be that? Let me see, I guess it closed down here. I'm not sure exactly how they calculated it, but it's on the news. Anyway, the market declined quite a bit, and there was some huge gaps in the markets. I bought here at 21,752-ish, and then I bought here at 21,348. The first stop was down here somewhere, because I don't know where the low is going to be. And then when the market went down, I bought a bit more here with some stops here. And then the market went all the way up. Booked profits on the first one here, which was this one. I effectively got rid of that one. And then the market shot up, closed the gap, went all the way up here, and I booked profits here from long here to long here. And then I walked away. So you can make money both ways. And yesterday when I was looking at this, I was extremely tempted to buy around 20,800, but I refrained from doing so because I need to be able to do other stuff today during the day. And when you start to trade very short term, you can easily lose concentration. Now looking at this today, you know, we had a nice little swift bounce. And again, longer term, it makes sense to be bullish from these levels. You know, if you want to hold positions for 5 years or so, nothing you're gonna hold, but even 2-3 years. We decline so much, it's probably gonna take 2 years for the market to recuperate. So it's a minimum 2-year investment horizon here. And if the market continues to decline and the world does collapse, you're probably looking at 5 years or something. But I don't think that's gonna happen. If it has happened, in my case, I'm still young. I'll be around in 5 years. I'm not gonna worry too much. In the short term, though, from a trading perspective, you have these highs. This is more of a sell zone than anything else. So I would wait. They can easily go up, but I would wait for this to, I would assume this is going to go a little bit lower. And then I'm going to tighten this up. Remember, what have we done this week? Well, stop losses have gone from like that. Actually, I think it went from here to here, and then push it down here, and then here, and now here. So we're pushing things down. At the very end, we're going to get stopped out. And then when it goes bullish, we'll go up, we'll go down, and we'll try to catch that to the upside. Okay, let's see if you guys have any questions. So we have True Invention, and we got Maurizio. Good morning to you guys. And we have Stefan as well. Can we take a look at dollar CAD? Has it finally topped? Let's take a look at the dollar CAD. So this is the dollar CAD. Just moved down quite a bit. So as you know, I've been waiting for this to go back, and it's not really that interested to do so. It has this gap. And it's a bit like the EURUSD. It's gonna come down one day. I'm quite confident about that. We do also have a massive head and shoulders with head, left and right shoulder. Gives us some target, very high targets. And I think we can maybe reach all the way up to 145 at one point. And for now, at least, the way this looks like, it still remains bullish. I have the low here, and then you still have that gap. I have that as my trend final. I'm going to remain bullish for now. You just need to make sure if it goes down and down and down, and you see like Aussie dollars rushing upwards, EURUSD is going up, GBPUSD, and you see like a short squeeze because people booking profits ahead of the weekend, then you don't want to be buying at the first level. Then you probably want to wait a bit. And if it goes way too deep, then that could potentially damage the structure of the pattern. And then you're looking at maybe some sort of reversal. But for now, it remains bullish. Okay, we did quite a bit of a detour today about the coronavirus. I hope you liked it. If not, let me know. I can definitely focus more on the markets. But this is a quite good little tool, and I'm definitely going to start to use this one more because it's all about the growth change. It's not necessarily about the total amount of people. And if we go back to the old maps that we've been using from the beginning, things are not that bad in China. I think like Hubei sort of had its lowest level for a very long time. And let's take a look at the numbers before we wrap things up. So if you look at there's a Hubei, and you got 786 cases, and you got 51 people, 51,553 that have recovered. So you only have 16,000 cases there, which is almost where, that's probably where Italy is right now. So it is possible to beat it. You just need to implement some difficult decisions. That's definitely going to hurt the economy. But that's what I guess what you want to do. And I know we're going to deviate again. I found this really interesting though. Take a look at this. You know that ship, the Diamond Princess? They had everyone contained on that ship. And there's a lot of criticism because they think more people got infected that should have been infected. And because the people on the boat had already been on the boat for 2 weeks. And then they made them stay another 2 weeks to posting and sort of the critical phase. What's interesting is this though. It's a big, like an experiment. Because that got a lot of attention. And they did some 4,500 tests on people there. So everybody was tested rigorously before, being let off and so on and so on. So they tested everyone and they had the numbers. They got them registered. And that includes severe cases, mild cases, and even people with no symptoms. That's as far as I understand. So it's everything. And if it is everything, then you can see 7 people died. And that means that the death rate is 1%, which is far lower than the numbers you're seeing out of China. So you might say, wow, why is it like that then? Well, because in China, they will put people with severe cases only. If you don't have any symptoms, like you're not coughing, you don't have bad issues with your lungs, you don't have any fever, but you still have the virus, you're not going into here. And as well, if you might have the virus, but you didn't really feel very ill, maybe you just had a bit of a headache for 2-3 days, and now you're fine, well, then you're not going into the stats. And if that's the case, what happens is you only have the severe cases. And that means that from the severe cases, you get yourself the number of deaths. And from there, you get yourself the death ratio. And that death ratio is about 3.5%. And that death ratio, of course, is not the same as if you look here at the Diamond Princess. So the virus might not be as bad, but of course, 1% of the world population, that's still millions of people. Okay, guys, we're going to wrap things up. I hope you enjoy this market update. I hope I can provide you guys with a little bit more support to understand the issues that we're facing in the world and how that is influencing the markets. Remember, money management, key, some sort of strategy. You need to know when to enter. You need to know when to sell. You need to know all those things to be able to do this safely. It takes as well a long time to become really, really good. Now, I do offer an educational course. You can actually read more about it on this page, and it's quite straightforward. If you want to access that course, you just need to have a trading account with ATFX and you'll find it. The course, I used to sell it separately, and I used to sell it for about $1,000 per seat because I did like a big long presentation, but this is actually updated content that I have here on ATFX, and it's all free to hopefully help you trade even better understanding the markets. All you need to do is to have a real account with ATFX, because the way they look at it, you'll probably trade a little bit, and that's how they then that's how it becomes good for everyone. You get the education, you trade with them, they pay me, everybody's happy. All right, guys, if you do have any questions about that, you're most welcome to send me email at info@investingcube.com. That could be easier. Again, just a normal trading account with ATFX is all you need. Have a great day, guys. And if you do sign up for the course, or you do have watched the course and you like it, do make sure you reach out to me so I can relay this back to the guys at ATFX, which we work with. Have a great day, and I'll see you guys on Monday.